What I want to show you is why 2023 is going to be a great time to be buying. Today I want to go over why buying properties when the recession hits, when rates are really high, is where you really create the generational wealth. I'll go through a couple examples of people I helped back in 2010 and 2011 who bought properties when it was not ideal to buy properties. And then 5-10 years later, they've created generational wealth because they bought at the right time. Buying when the prices are low, even if interest rates are high, when those two flip, where interest rates go back down again, that's where the generational wealth is created. We're going to go through a live example. Grab a piece of paper, join us, and put in your own information as you go. Let's run through the math. It'll show us how to create that generational wealth, and it's all based on interest rates. Interest rates and prices go in reverse because, just like I did on another video, affordability. People buy in payments, so when interest rates go up, they can afford less, so home prices go down. When interest rates go back down, they can afford a larger home now because their payments stay the same, but their affordability, what they can afford with lower interest rates, now allow them to buy a higher price point, and that's one of the major factors that drive up prices. Let's look at where we think 2023 will be. Interest rates are projected to be 8%. This works if they're 9%, 10%. We're just going to use 8% because that's where we see it going right now. Let's just say the market, the people, or even investors can afford a $250,000 property in 2023, $1,834 payment. We've gone over this in another video. Payments, it's not only what people can fit in their budget. America buys on payments, cars, TVs, homes, what fits in their budget, but what also fits in their qualifications. If they don't qualify for something more than $1,834, that's all they can get. Home prices will have to match what people can afford, especially medium home prices and below. I know there's a lot of cash offers on higher stuff, but when we're looking at affordability, we're looking at what people can afford. In 2023, we're looking at 8%. We're looking at a payment of $1,834 and a loan amount of $250. You could take this and put in any information what you want. What we're looking at now is us buying homes that are valued at $250. Our payments are at $1,834. Just as an example, if interest rates were 9% and our affordability is still only $1,834, we remember what people can afford and what they qualify for, then our home buying power only goes down to $228. I just want to show you this works no matter where the interest rates are, because we really want to buy when interest rates are high and we can afford it. We can afford the cash flow. If we're buying this as a rental and the cash flows or breaks even, that is fine for right now. When interest rates go back down, that's where we get the flip. That's where the wealth is built and the cash flow accelerates through the roof. So we purchased in 2023. Now let's go into the future, 3 to 4 years. Things have stabilized. The world is back investing in the US, driving the interest rates down. Inflation has calmed down. And let's just say interest rates go all the way down to 5%. We're not saying ridiculously like it was in 2020 where it was 2.25, but let's just say it goes down to 5%. And remember, someone can afford in their budget what they qualify for, that $1,834. What this means in the market now, when interest rates are 5% and the affordability is still at $1,834, this new home value now shoots up to $341,000. That same house you bought 3 or 4 years earlier now is on the market for $341,000 based on affordability. This is the math behind it. It doesn't mean it's going to be exactly there, but it'll be very close because America runs on payments. What you've done now is created in this one property $91,000 in equity. You purchased it for $250. It's now worth $341. So you have $91,000 in extra equity. But here's where it really kicks in. You can now refinance that property at the 5%. After 4 years, you're down to about $245. Now your payments at 5% at $245 are going to become $1,315. Now look back, when you bought this property, you locked in at the 8% and your payments were $1,834. Now, 3 to 4 years later, interest rates are back down. Values have gone up because of where the market demand and interest rates are. Now you can refinance it for the same amount. So you go back and refinance that loan, $245,000 because you've been paying down a little bit, and now you have payments of $1,315. You just increased your monthly income $519. Like I said, back in 2010, I helped the Greens, the Hills, buy 10 properties a month using the Burr method. And what they were able to do is create generational wealth, because in their case, in 10 to 12 years, those properties actually 3x'd and 4x'd in value during that time, and rents 3x'd. Before I go into the rest of the numbers, if you like this video, please give us a thumbs up. It helps others and it helps us as we grow. Looking at these numbers now, what happens, like the Hills, the Greens, who bought 10 properties, and you just let the markets take care of itself. You were able to buy a property in 2023 when interest rates are high, values are low, and then it flipped on you. Interest rates came down 4 or 5 years, 3 or 4 years later. Now, if you bought 10 of them, you just created almost $1 million in extra net worth. On top of that, this is about $6,000 a year in extra income, because this is income you created by lowering your rate when everything flipped back. You bought 10 of them, now you have an extra $60K a year in income. Just by buying when everyone else is not buying when rates are high, values will be low, and letting the market correct itself when interest rates come down and values go up. This is how you take advantage and create that generational wealth. This is where you hear those stories of people who have created that in the next, buying now, 5 to 10 years later, being done, being free, creating that generational wealth on what they can do. If this is something you have a question on, you want us to run numbers, just email us. We'd be glad to get back to you with any information we could help you to become a successful investor.